Don't know, folks, if you saw this, but as Taylor, my Monday guest, talked about, Bank of America's balance sheet is holding $130 billion in hold to maturity. Apparently, Jamie Dimon was poking fun at Bank of America CEO last week when he said, hey, rates could go to 6%, basically meaning, hey, buddy, your hold to maturity is going to get even worse. I have some more thoughts on Bank of America in a minute, but let's welcome Anna to the show. How you doing, Anna?
I'm doing great, great, great to be here with you today.
Yeah, so I don't know if you obviously, I think you saw this, but Bank of America went out early on the long end and bought a whole bunch of apparently 10, 20, and 30-year bonds when they were, the high threes, low fours. And, now they're 5.5. So Bank of America's report yesterday highlighted $130 billion in hold to maturity. So that's pretty crazy. If you had to mark that down right away, that would be a problem.
Exactly. And, it just goes to show you basically the way that America allows banks to keep things on or off the balance sheet to show the truth about their financial position is unlike any other country. Most countries make their banks show all of their, basically their assets like bonds, for example, and they're marked to market when they do their financial reports. And in the US, essentially this hold to maturity means I get to say I have this much of assets based on whatever I paid for them. As long as I put them in the hold to maturity bucket, I don't have to tell you what they're worth today. I only have to tell you what they're worth today and what my real financial position is if I move them to be available for sale. And once they're moved to the available for sale line, they have to mark to market, meaning they have to show the today's current value, which is much less. So that $130 billion of assets today on their balance sheet might only be worth a third of that today, and many,
Yeah.
depending on the timing of how long these, bonds were out for and what their rates are. But essentially it says that Bank of America is in a very bad, true financial statement position. And it's one of the largest banks in the country. And so, I think that it just highlights that there are many, many, many banks in the United States that definitely have a much poorer financial position today. And it probably will continue to get worse, Michael, because, basically as they have to start basically raising their reserves, they're going to have to sell some of those securities in order to do that. And if rates continue to go up, which is somewhat beyond what the Fed controls when you look at the Treasury market, if they continue to go up or we enter into a war, which is typically pretty inflationary, you could have a situation where a lot of banks have to start, raising reserves, and they have more depositors flee for money market accounts, brokerage accounts, et cetera. So I think we should not underestimate the fact that banks are not in a very good position in the United States. And that doesn't mean go pull all of your money. But if you have more than $250,000 in any bank at any titling, you might want to spread it around a bit. Banks are over leveraged. The government is over leveraged. People are over leveraged. It's not a good news headline.
No.